Hello everybody. So I'm making this video mostly to illustrate the nonsense of the market, because the market is crashing on good news, and this is not the first time. The market is very fickle. Indeed, without good news, the tariffs are not going through just yet, at least most of them. You can see an hour ago, 57 minutes ago, Trump says most goods from Mexico will be exempt from recent tariffs for 1 month. Mexico given a month-long reprieve. This is the second extension we've had on tariff. By the way, this extension extends to the entire NAFTA accord, USMCA that they renamed afterwards. So essentially, it's business as usual for an extra month. Okay, Canada is not exactly the same. Canada's exemption for 1 month only applies to the auto industry, but the auto industry was one of the biggest sticking points, one of the biggest issue to the tariffs being put on Canada. That was one of the most annoying things. And who knows whether we are a few hours away from Canada having an entire exemption too for another month. That would be another extra month exemption if that were to happen. Anyways, I would say the tariff threat, the tariff news is at least 65% less than it was 36 hours ago, and you would expect the market to have bounced back heavily, especially too when Trump said there would be carve-outs to Canada and Mexico for agriculture. So if these carve-outs are the same as NAFTA, if they're as big as NAFTA, it's mostly talk. It's like the tariffs are not going through in any very big way for now. It's very minor for now. And given the fears that there was in the market when this was announced, given the major crash we had, you would expect today the markets to bounce, to be green. But they're not green. They're down. You can't time the market. And I think they're down because people are saying that Trump is going to sign executive orders today at 2 p.m., and that's more uncertainty. And the market is more upset. And of course, today, Bitcoin, like I said, is holding up really well. I've said in many of my prior videos, I'm happy with the performance of Bitcoin. It's only down 4% on such a red day for the Nasdaq. So you're a little more volatile than the Nasdaq, but barely, maybe 50 to 70% more volatile than the Nasdaq. So very impressed by Bitcoin, but I guess it's impacted by this tariff stuff in spite of the wonderful news that we may have a reserve tomorrow, a Bitcoin reserve tomorrow. The event is in the evening. But I guess the market thinks that HIMS suffers from tariffs too now because the stock is down 13%. I don't think that's related to the LifeMD GLP-1 news. That wouldn't take that stock down so much. The point is, you can't really tell where the market is headed in the short term. It's all about risk off right now, and so stocks are selling off. Money managers are selling off stocks that are easy for them to sell. I do want to point out, and this is particularly upsetting to me, it's like the markets are open, everything crashes, and it's the night, everything bounces back up. We need 24-hour markets, especially, if you want to make a trade. At this point, I'm considering moving everything to Robinhood because they're essentially the only ones who are doing somewhat of an after-hour trading. But even then, that's not very efficient. The markets need to open 24/7. This is extremely annoying, where at the end of the day, it crashes. We get at the low at 3 p.m., and then it bounces right back, and people with traditional brokers get excluded from this bound. Extremely frustrating. Anyways, this is a macro story. There's a lot of a macro story when it comes to the markets and this market-wide reactions, right? Amazon falling 3% is not a fault of Amazon. Broadcom falling 5% is not the fault of Broadcom. It's just people selling off whatever they have on hand. What I want to say is that we had very good news in the way of liquidity today because the European Central Bank is cutting rates yet again. They've been on a cutting spree that we could just dream of in the United States, of this cutting spree. The Europeans are cutting rates fast, and I can't wait for the Fed to do that. Like, what is Jay Powell doing? Anyways, it's just extremely annoying. These high rates in the US are just a bluff. You can see the Europeans are dropping their rates. Look what happens to the stock. The German stock market is doing extremely well, and even if you look at the top 50 US stocks, they've bounced out so nicely ever since the European ECB has started dropping the rates, and Christine Lagarde telegraphed perhaps another rate coming in a month or something. So this is going to be pretty darn good. I think the delta is going to be so huge between the US and Europe that the US is going to have to cut rates. Anyways, what's the conclusion of this very short video? In the short run, it's almost impossible to predict where the markets are going. When you think there is good news, it's bad news. Bad news is good news. Good news is bad news. It's complete nonsense. It's exactly what Ben Graham has always told us. The market is manic depressive. You never know where the market is going to go. And that's why making short-term bets, that's why options, that's why margin and with the risk of being wiped out, that's why this is all so risky. Common stocks are way less risky because it's like owning a right to the cash flow of the business forever into the future. Right? 2 days ago, we would have thought the market would rally. They did not. Nobody knows where this is headed. In the long run is the long way to go. And that's why on this channel, like today, I tried to make a public video of a fundamental analysis on Celsius versus Monster. And these videos take a much longer time to make than a video like this on the market crash. This is a 20 video to make. This takes hours to make a video like that. And of course, YouTube algorithm, or nobody watches the videos. That's why if you're on Patreon, you may notice my fundamental analysis. I've been posting it more on Patreon, where the Patreon members are actually long-term investors. It's like YouTube is all about, short-term fear. Whenever you talk about fear, whenever you talk about, crazy stuff, these videos get watched. But whenever you talk about fundamental stuff, nobody really cares about fundamental, which is unfortunate because we should care about fundamental stuff. The fundamental analysis should be the most important thing. That's point number one. Point number two is the liquidity is coming in the US. I am looking more and more, and to me, it's looking more and more like May 7th, we're going to get a rate cut in the US if this continues. If this market crash, there's no way to call it, a minor crash, a small crash, if this keeps headed this way, I fundamentally believe the rates will keep going up for May, and we may get a rate cut in May, which then would make the markets go back up. But then again, keep in mind, we can't predict. So sorry about this video. I'm just very upset because we get the good news and the markets keep dropping despite the good news. So we really can't catch a break. It's a buying opportunity, but I'm tired of buying. I want to go on a vacation and not buy for 2 weeks. So anyways, thank you so much for watching. This is not investment advice, not financial advice, just entertainment. Hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.